Hey guys, welcome back to the Gibson Hustle, where we discuss different hustles of business and investing with the main driver to build wealth over time. This playlist is basically a weekly portfolio update where I hope to take you on a journey to grow 50k into $1 million over a 10-year period. This will be purely in the ASX and we'll be using the quality at value methodology. This is episode 19 and exciting to announce, we went from 73 to 75k. Alright, without further ado, let's jump into it. Alright, so the structure. We'll have a look at the sells and the buys that we made this week. We'll have a quick overview of the QAV stocks performance, both over the last week and since inception. Then we'll have a nugget part where you should hopefully learn something new each week. Then the income and owner contributions, which will lead us to an overall portfolio value. And last but not least, a bonus sign-off quote. Well guys, unfortunately Rangy had to go this week due to a real 10% stop loss. We bought in up here at 0.835 and we sold just under our 10% stop loss at 0.74 cents. It was unfortunate as I really like this company, but it was due to the wild swing of the market this week. We do have one spare position to fill, so hopefully we might be able to enter this one again if sentiment reconfirms. Now it was really hard to enter a stock this week, everything was dropping off a cliff, but we did reunite with an old flame. Welcome back to the party, FMG. We ended it at $19.78. I'm hoping iron stays on the recent trend up as we have been trading a lot lately. I also tried to enter CIA, Champion Iron, but it had a recent spike and I missed out. Alright, benchmark time. So how did XJO fare this week? Well, that hurts. Down another 2.6% for the Monday to Friday trading week. There was a time it was down over 5%, but it had a nice recovery from Thursday onwards. So how did our stocks do this week? We were down again 2.37% for the week. Only just slightly better than the All Ords at 2.6. As we know, Rangy locked in a negative 5.34% and Ive Group gave us a negative 4.73%. These were the bigger shakers. Capral and Clearview gave us a small positive of 1% each as the bigger movers. Now for the updates on the list. So here is the last week's buys, holds and sells. The ones that changed are as follows and why. Surprise, nothing actually changed other than FMG being added to our buy list. Remember, do your own research, especially in the market we are in. Alright, so since inception, we have a pure capital gain of negative 1.75%. The portfolio has a dividend return of 1.94%. This gives us a total return of positive 0.19%. Far out, it's only just clinging onto the positive territory. Come on next week, do us proud. Alright guys, today's nugget section is going to be about our recent purchase, FMG. Now this video is probably already going to be quite lengthy, so we'll push through this segment quite quick. We might do a part 2 where we talk about the operations at a later date, but for now, we'll have a quick overview of what Fortescue is, we'll talk about the management, we'll look at some graphs and some numbers, and that should just about do us. Man, I honestly love this company so much. The innovation and looking after its people, it really resonates with me as a current business owner. Alright, let's jump into it. So the overview. Look, this is mostly my words from previous readings, but all in all, Fortescue is in the material space and was established back in 2003 in WA as an iron ore miner and exporter and continues to explore for new mines. Andrew Forrest, as we know him as Twiggy in the media, founded the company and ran it for a number of years. He is still a director and chairman and owns a 36.76% stake in the company worth a whopping $22 billion. The current CEO is Elizabeth Gaines, although she is stepping down to become an ambassador for the global green hydrogen brand, but will be involved in the global search for her replacement. She will also remain on the Fortescue board, which is great, and Miss Gaines actually did a remarkable job over the last 4 years. Fortescue actually has an amazing stretch target announced March 2021 of zero emissions by 2030, making them a global leader in this space. Fortescue Future Industries is a subsidiary and focusing purely on the target, which is establishing the global portfolio of renewable, green hydrogen and green ammonia operations. 10% of the net profits after tax of Fortescue goes to FFI to fund the expansion as part of the capital allocation framework. Alright, so some numbers. So this is taken from Stock Doctor. Check out the return on invested capital, 100%. Now I don't come across this much, but I typically like to see around the 15% mark. 100% is insane. Also note the latest revenue growth of 58%. This is mainly due to the crazy inflated prices of the iron ore. We wouldn't expect to see this here next year, but time will tell. Free cash flow is also absolutely amazing, and now as per the capital allocation framework, 50 to 80% of NPAT is to be paid out to shareholders. The way Stock Doctor calculates it is slightly different to the annual report, but since financial year 2017, they have been hitting the target, with a recent one topping at 80%, and then 10% went to FFI as discussed earlier. Alright, now some charts. So firstly, let's check out the iron ore 62%, as this pretty much governs the share price. So since April 2020, the price of ore has gone from 84 bucks a ton to 220 bucks a ton between June and August of 2021. Then China started reducing output, making an oversupply of iron, taking the ore price from 220 to 90 in the matter of 2 months. It has started to recover back to 130 now, but wow, it's crazy how much influence there is. Now FMG. This has been a mountain of a climb from $5 per share in Gen 19 to a 5x gain in July 21 at $25 per share. Quite impressive to say the least, but along came the big bad iron crash and poor FMG went off a cliff from highs of 25 to lows of 14. Insane. Alright, I think that's enough about FMG. If you want to hear more about them, let me know, as I'll happily cover more information on this company. I just love them. So we had some owner contributions hit the bank last week as per our trading plan. So $37.50 has been added to our CDIA account. Now this is scheduled for the 22nd of every month. Also, as per our trading plan, we can start looking for the next stock as we have that magic 10K. Spoiler alert, I'm thinking either Champion Iron or back into Guru. Let me know your thoughts below in the comments. Alright, so our cash account is now at 10,841. So with our 10,841 in cash, plus our 64,492 in stocks, takes us to an overall value of 75,333 bucks, which is about a positive 2.77% total portfolio gain from last week. Now I'm not trying to kid anyone, the capital gain is purely from the owner contributions, as the market was quite brutal this week. Next week, hey? Well, that's a wrap, guys. Please make sure you guys hit that like button, subscribe if you haven't, and tickle that bell to get notified when my weekly updates come out. If you want to see anything else in the playlist, please just leave us a comment below. I'll make sure I reply to you all. Now you all know the saying, keep healthy and wealthy. See you guys.